A trend is a series of impulsion and corrective moves between reversals. In this lesson, we're going to focus on the impulsions of a trend. Whenever identifying a trend, you need to understand that the trend is going to vary depending on the time frame being viewed on a chart. And the time frame being viewed is and should be specific to your trading or investment objective. Now, looking at the chart on the left, right over here, we have a long-term uptrend. We do see some pullbacks where the market consolidates before moving higher again. However, eventually the uptrend runs out of buyers. Once sellers exceed buyers and buyers go to zero, the demand and supply relationship shifts in favor of the sellers, resulting in a significant drop in price. The impulsion phase is the dominant direction of price, whether it is an uptrend or a downtrend, and the movement is typically sharp and steep in nature. In a downtrend, the impulsion moves are the steep red candles heading to the downside. An impulsion phase is characterized as high-speed candles, often all one color, powerful, relentless, and persistent. Impulsion demonstrates commitment to the trend direction as price easily breaks through the distal line of any opposing zones on low time frames. Following the trend is the path of least resistance, and we follow the path of least resistance with an understanding that the market moves in the direction where the imbalance is greatest. However, before jumping into any trade, we want to identify the areas in an uptrend or downtrend when impulsion is greatest. And we do that to ensure we're joining the market where the largest flow of money is in the market. With trend analysis, we can use these examples to help visualize and identify the impulsion phases. In the uptrend on the left, right over here, we have a very steep and short-lived upward movement, which are the impulsion phases of the uptrend. Notice the candles are all mainly green and one color. On the right, we see a downtrend, and the tallest, sharpest moves in price are long and fully red. The red highlighted trend boxes assist with seeing the difference between the up and down moves in different trend environments. So by now, you should have a basic understanding of what the impulsion phases of a trend are. And you should have a basic understanding of the key characteristics to help identify them. In the coming lessons, we'll learn about the counterpart to the impulsion phase, which is the correction phase. Now, if we look over here on this chart on the right side, you see this area where the cursor is, where it's going up, it's down, and it's up, but it's not really making any higher highs or higher lows. It's kind of going up and down and scaling sideways within a range. And then you just see it drop. This is the impulsion phase. You see these long red leg candles. You see these little short candles where it looks like it may have experienced some pullback, some very short-lived pullback, and then the downtrend or impulsion phase continues with these long leg and gap candles here. If we come over to the right, we see it basing again a little bit like it did up here. We see it basing at the bottom, and then it starts to move up. An impulsion phase here starts to come sideways again in a range. We see another impulsion phase, some consolidation coming sideways in a range, an impulsion phase, and then some more sideways basing. Then this looks like another impulsion phase, comes up a little bit, bases, and then another impulsion phase. So what you want to do is you want to memorize the terminology associated with the impulsion phases of a trend. Go ahead and pull up your own chart on your own preferred trading platform, and you want to practice identifying impulsion phases in an uptrend and practice identifying impulsion phases in a downtrend. Hope to see you in the next video.